In this video, I'm going to show you exactly how I would start my day trading career over again if I had to start from scratch. Before getting to a point of making $1,000 to $5,000 every single day trading ES futures, I also wasted tens of thousands of dollars that I didn't need to lose if I had known what I'm about to share with you right now. I'm going to start from the very beginning, a simple way of understanding exactly what futures is. Then I'm going to show you the platforms and tools that you need to follow along. I'll talk about trading psychology, which is probably the most important thing that will make or break your trading. I'm also going to give you a complete crash course of the most important things about technical analysis for futures. Then I'm going to share with you how to build and test your own strategy and the strategy that I personally use. At the end, I'm going to take everything we've learned and apply it to a real-time trade that I took today. So by the time you finish this video, you're going to have a clear-cut, simplified path to starting your ES trading career properly. Okay, let's first start by understanding exactly what ES futures is and how we should be looking at the market. ES futures is the E-mini S&P 500 futures contract. It tracks the S&P 500, meaning the biggest 500 companies in the United States. What makes futures special is that you get built-in leverage. You can trade nearly 24 hours a day. There's tons of liquidity. There's billions of dollars in volume daily, and you can profit if the market goes up or if it goes down. Now, later in the video, I'm going to pull up a chart and show you exactly what to look for when taking trades, but right now, we're not going to worry about anything other than how and why the market is moving. Whenever we're looking at a chart, we're looking at increases and decreases. All the chart is showing us is a visual representation of mass psychology. There are buyers and there are sellers. The market is adjusting to fill imbalances caused by supply and demand. So how this works, let's take right here when price is moving up. This means demand from buyers is outweighing supply from sellers. If demand outweighs supply, the market moves up until there's a point where supply starts to outweigh demand and then the market corrects. This produces volatility, which opens up tons of trading opportunities for us. Simply put, as traders, our job is to find areas where we can enter at a certain price, have the price increase to another price, and however many contracts we bought times the increase of price gives us our profit. But let's take another layer deeper to understand where these opportunities come from. Let's take a one-year view. Over the course of the year, the S&P 500 might gain 10, 15, or maybe 20%. So if we bought $100 worth of the S&P 500, we'd have $120 in a year. This is investing. You wait an entire year to get 20%. But what happens if we zoom into just one day? Now, instead of looking at an entire year's worth of movement, we are looking at individual days. Even today, you can see that we had a ton of movement even in the last 3 hours on the chart. So instead of waiting an entire year, today, I am already up around $1,000 on the trade that I entered this morning. And I'm only trading one ES contract, but the market moves a lot, so I'm able to make money on small moves like this. So instead of waiting an entire year, I was able to make money today in a few hours just because I understand how to day trade. On ES, every point is worth $50. So a 30-point move is $1,500 per contract. But as we zoom into these one-day views, the math and strategy gets a little bit more complicated and more important. You need to know where you're buying and selling and the likelihood of that happening. Just as an example, the trade that I took today, I was able to pick an area where I expected price to bounce. We'll talk exactly about where these areas are later in the video. I entered longs expecting price to bounce. Keep in mind, my strategy is fully automated, so I wasn't actually manually entering this. I have an algorithm that does this for me, but the exact same concepts apply even if your strategy is being manually executed, meaning you are actually pressing the buttons yourself. So today alone, I will make a few $1,000s just because I have a profitable strategy in place and I executed that strategy. This is not to brag, I am just showing you how powerful this skill is once you actually learn it and start using a profitable strategy. Now let's talk about the tools, apps, and websites that you need to get started. So realistically, you need 2 to 3 major things. The first is TradingView. TradingView is your charting platform. This is where we do all of our charting and analysis, and the great news is that it's completely free. Keep in mind there are paid versions of TradingView, and I do use them, and I would recommend that you use them once you start to make some money trading. The second thing you need is a broker, a way to actually place trades. The great thing about futures trading is that you actually don't have to use your own money to trade. There are things called funded account companies, and what these companies do is they give you a test, pretty much allowing you to prove that you can make money trading. You have to make around 5% on the account. Once you pass this test, they will then move you to a live trading account, and if you make money on this account, say you make $5,000 or $6,000, they will actually allow you to keep a percentage of that profit. So it's a really nice way for somebody who's getting into trading to invest only a few $100s and have that potential to make back $3,000, $4,000, or even more. As far as what prop firm to use, you guys can choose whichever prop firm works for you. In this video, I'm going to be using TopStep. I feel like they've been around for a while. They're good. I've always had a good experience with TopStep, so I will recommend them. You can also use Apex, you can use Tradeify, you can use whatever works for you. Anytime you're placing a trade on ES, you need to understand what it is that you're actually trading. One ES contract controls $50 per point of movement. So if ES moves from 5,000 to 5,001, that's a $50 gain or a $50 loss on one contract. If it moves 10 points, that's a $500 gain or $500 loss. 50 points is $2,500. This is both the opportunity and the risk. The notional value of one contract at $5,000 is $250,000, but you don't need $250,000 to trade it. Your broker and your funded account has margin requirement, usually around $500 to $1,000 for day trading. This is why I recommend you guys use a funded account, because then your risk is so little and your potential for reward is so high. In futures, going long and short are equally easy. If you think the market's going down, you can just click sell. If you think it's going up, you just buy. No uptick rule, no borrowing shares. It's literally just done with the press of a button. ES Futures trades nearly 24 hours a day. The main session is from around 8 a.m. Eastern Standard Time to 5 p.m. Eastern Standard Time. The highest volume and the best opportunities are typically during the first 2 to 3 hours between 9:30 a.m. Eastern Standard Time and noon. Before you enter any trade, you must know 3 things: your entry price, your stop loss price, and your take profit price. Let's use today's trade for an example. You can see that my entry price was $6,886. A great way to look at this is by going in TradingView and clicking this little long position filter. The reason I don't have this up right now is because the indicator in the algorithm that I have on my chart automatically marks all of this stuff out for me, but for the sake of the video, I'm gonna go ahead and manually mark it out so you guys can see exactly where my entry price is. Entry price is very simple, right guys? Entry price is literally where did you enter the trade. Stop loss is super simple, guys. A quick way to think about stop loss is where is your loss going to stop? So in today's trade, our stop loss was right below the New York Open, which was a key area of liquidity. So if price went against us, which it didn't, but if it did, we would have gotten out of our trade right there for a small loss. The next area that we focus on is our take profit. This is also pretty simple. This is where we are taking our profit. So when this hits our take profit, we are going to be fully out of the trade and we are going to make money. The important thing to look at here is your risk to reward, right? So how much are you risking? How much money will you lose if price hits your stop loss? And in this case, it's 11 points for us, which would be around $300 with the contract size that we're trading. And then how much money will we make if price hits our take profit, which for us is going to be around $1,000. I always like to have a risk to reward ratio of 1 to 3, meaning I am risking $1 to make back $3. The reason I do this is because this allows me to not obsess over winning every single trade, because just like a casino, I know that over a long enough period of time, the odds are always in my favor. Let me talk about something that most traders completely overlook: trading psychology. You can have the best strategy in the world, but if you can't control your emotions, you're going to blow up your account. Here are the biggest mistakes. Revenge trading. You take a loss and you immediately want to make it back, so you jump into the next trade without waiting for your setup. This usually results in another loss, and then another, and then you've turned a $200 loss into a $2,000 loss. The fix is have a max loss limit per day. If you hit it, you're completely done and you close the platform. Fear of missing out is another big one. The market's ripping higher, you're not in, you feel like you're missing out, so you chase and you enter at the worst spot right before it reverses. The fix: only trade your setup. If you miss a move, let it go, there will be another one. Moving your stop loss is another bad thing. If your trade's going against you, about to hit your stop loss, and you think, oh, I'm just gonna give it a little bit more room, so you move your stop further, then it hits that too, you've now lost twice as much. The fix: set your stop when you enter and do not touch it. The only time that moving your stop loss is okay is if you are trying to decrease risk, not increase risk. So for example, today I'm in a trade. If I move my stop loss up, I would be decreasing risk, meaning I'm protecting my account. But if you're moving your stop loss down, you are increasing risk, meaning you're increasing the amount of money you can lose. Taking profits too early is another big mistake. If you're up $300 and you're scared that it'll disappear, you might take it off, even though your target was $800. This prevents bigger wins that make up for your losses. The fix to this is to have a plan before you enter and let it run to your target. Think of trading like a casino. The casino doesn't need to win every hand, but they have an edge, and over thousands of hands, that edge makes money. Your job is to find your edge, execute consistently, and let probability work in your favor. You're gonna have losing days, but if your strategy has a positive expectancy and you stick to your rules, you will be profitable over time. The moment you start breaking rules, over leveraging, and revenge trading and chasing, you've stopped being a trader and you've become a gambler. Let's talk about the math that determines whether you will succeed or fail. Most beginners focus on win rate. I need to win 80% to make money. They think that they need to win 80 or 90% to make money. That's not true at all. You could win 40% and still be extremely profitable if you manage your risk properly. What matters is expectancy. Win rate times average win minus loss rate times average loss. Example, if your win rate's 70% and your average win is $200 and your loss rate is 30%, your average loss is $600. Even with the 70% win rate, you are still losing money because your losses are so big. Second example, let's say your win rate is 45% and your average win is $800, your loss rate 55%, but your average loss is only $300. Your expectancy is plus $195 per trade, so your win rate is still less than 50%, but you're making money because your wins are bigger than your losses. This is why risk to reward ratio is everything. I never take a trade unless I'm risking one to make at least two, probably three back. To make at least two, preferably three back. If your account size is $10,000, I recommend risking 1 to 2% of your account. When you risk 1 to 2% of your account, you're not going to be stressed out over big losses, and you'll allow the math to play out over time. If you're risking any more than 1 to 2%, you're going to be an emotional mess, and that's just bad math. That's just bad trading practices. Our goal as traders is to manage risk, not to overexpose ourselves to risk. Looking through a quick back test of my strategy, which is the algorithm that I currently have running, you can see that my average winning trade is $2,300, and my average losing trade is only $1,000. And my largest winning trade, and most of my winning trades, are around $4,500, meaning usually I'm winning $4,000 and just losing $1,000 with my account size. I also have a 53% win rate, so even if my win rate was lower, like 30 or 40%, I would still be making a lot of money just due to simple math. If you all are interested in this algorithm, you can click the link in the description of this video and we can hop on a quick call and I can show you exactly what it would look like plugged into your account. Now, let's go over the exact strategy that I use. My trading strategy is extremely simple. All I am doing is I am looking at London session, Asia session, and New York session. I am then marking out the untested highs and the lows of these sessions. The reason I do this is because these are areas of liquidity, meaning there's lots of buyers and sellers around these areas. When price hits one of these areas, it's going to give us a big reaction, which is what we need to get those positive risk to reward trades. You can manually mark out your sessions if you want. I found that it's a lot easier to just use an indicator. I have a link in the description of this video which will give you guys access to the exact indicator that I'm using right now for completely free, so you guys can mark out your sessions. The only other area that I marked out is the 8 to 8:15 a.m. Eastern Standard Time New York Open. This level is used for my break and retest setup, which is what happened right here. The break and retest setup is very simple. Price breaks above the New York Open, we retest the midpoint, my algorithm executed a trade right here. This trade was a long, we got out at the previous day's New York high, giving us a risk to reward of 1 to 4. On that specific trade, we made $4,575. The next two trades that happened were extremely small losses. It happens, part of the game. The next trade was a beautiful win. We got around a 1 to 2 risk to reward ratio on this trade. This was similar to the first win, which was just a break and retest setup. We then took another break and retest trade. This time it was to the downside. We broke out of the New York Open, retested the midpoint, and then our algorithm entered some shorts. We trailed the stop, got out of that trade for a nice profit of around $2,000. On this specific break and retest trade where the algorithm exited, I was actually asleep. If you guys look here, you can see that this happened at midnight and your boy was well asleep. Here's another beautiful trade. You guys can see right here that we had an untested Asia high. So when price approached this high, we entered some shorts with our stop loss right above this high. Then we exited this trade right at this untested London low. The great thing about this strategy is that you can kind of use these levels as targets. So if you're entering off of one level, you can then use the next level as a target. So you have a very clear idea of where you're actually getting out of the trade. Back when I would trade goofy concepts like support and resistance, I would have no idea where I was getting out of the trade or even where I was getting in the trade. So it's very nice to use a strategy that has very mechanical entry and exit rules so you actually know what you're doing. The algorithm took another trade off of an untested Asia high. This one I was also asleep for. When we exited, it was pretty late at night, so I was not up, but that's a great thing about having this algorithm is that it doesn't, we took another short off of Asia high. Algorithm was able to trail the stop for us to get a nice profit of around $2,000 on this specific trade. Now let's do a full review on the trade that I took today so you guys can see exactly what went on. We're also going to do a live broker login just so I can prove to you guys that I am actually trading because there's a lot of fake gurus on this app. So the first step is define your setup. Today, we were able to see that we had a beautiful break and retest. Once price broke out to the upside, We had very clear entry conditions. We were looking for a retest of the 15-minute midpoint right there, which we got. The algorithm entered longs. If we did not get the retest, we simply would not have entered the trade. Today was a fully automated trading day for me, meaning I was not in front of my computer while this trade was being executed. I had a pretty busy weekend and I had a lot of stuff go on in my personal life, so I was working out this morning, just clearing my mind. I was actually walking the bridge, and the algorithm entered this trade at around 10 a.m. It's currently around 4 p.m. The market's about to close, so the algorithm has automatically trailed the stop to a 1 to 3 risk to reward and gotten us out of the trade right here. Now I'm going to do a live broker login so you guys can see exactly how much money I made today. Keep in mind, my main account is a live futures account. I just wanted to use a funded account because that's what most of you all are doing, so I wanted to make this make sense for the viewers. And I wanted to demonstrate that the algorithm can work perfectly with funded accounts because most of these algorithms are trading on sketchy offshore Forex brokers. You guys can see here that on my Top Step $50,000 account, I was able to make $884 today. This trade was fully hands-off. I did not do anything today at all besides record this video for you all. So while I was walking the bridge, I get a notification that the algorithm enters a trade. I close my phone, I continue walking the bridge, and then a few minutes ago, just got another notification that we just got out of the trade, and now I'm up $884 on the day, which is nice considering I was not sitting in front of the computer. Now I'm going to show you guys how my algorithm has performed over the last 3 months and how this trading strategy has performed over the last 3 months. Keep in mind, this strategy is fully mechanical, meaning I literally just took my existing strategy, I coded it, and now the bot fully executes it, hands off. You can see that the first trade was a small loss of around $1,200. So the account started out negative $1,200, and then we had a nice win, bringing us up $250. Then we had another beautiful win of $4,200. Then we won $4,000, so then the account was sitting at a profit of $4,250. One more small loss, and then that day we didn't take any trades, so it was just break even. And then we started getting some really nice wins coming in. The account's now up $3,000. Up $7,000, up $12,000, a few small losses, and then the account is back up to 15 grand. The main thing that I want you all to focus on here is how steady this growth curve is. We take small losses, but our wins are so big, so it doesn't even matter that we take small losses. At the ending period, the account finished up $32,750. Keep in mind, this is only on a few contracts of ES Futures. You might be trading with more contracts than this. You also might be trading with a little bit less. Before we finish today's video, here are the biggest mistakes that I see beginner traders make that lose them so much money. The first mistake is trading too large too soon. Some people take 50 grand or 100 grand in their savings and immediately put it into a trading account. Do not do this. Start with micro ES or start with a funded account where you're not even risking your own money. I also see a lot of beginners not place a stop loss. This is awful. People just say, oh, I'll watch it. No, you won't. Always use a hard stop. You're going to forget about it and end up losing money. Or, one better, have a fully automated strategy where you actually don't have to watch it because the algorithm is literally executing your trades for you, so you can't possibly mess it up. Another mistake I see people make is trading during lunch. 11 a.m. to 2 p.m. is chop city. Most professionals do not trade during then. It's okay to have a trade open during that time if you have a level that you expect to get hit, but if you're just randomly trading during that time, you're probably going to get chopped around. I will also see some beginners ignore economic data. If you are manually trading, you have to understand exactly when every single news event, economic report, Trump speech, world event, tariff deal is coming out. You can do this by going on forexfactory.com and keeping a close eye on Twitter, Bloomberg, Fox, CNN, and all the other news networks that are giving you this news. The great thing about having an algorithm is you actually don't have to be glued to the chart because the algorithm is executing these trades for you. I also see beginners trade without a trading plan. If you don't have a trading plan, you are completely lost. If you can't tell me your average win rate over 100 trades, your average risk to reward, your average expectancy, your biggest winner, your biggest loser, your average winner, your average loser, you don't have a strategy, you're just gambling. And even if you do have a trading plan, most people do not follow their plan. I also see people overtrade. You don't need 10 trades a day. I just showed you guys my strategy and we take 1 to 2 trades a day. Sometimes the best days are just waiting for the perfect setup. All right, I know that we've just covered an insane amount, and if you're overwhelmed, that's completely normal. Trading will take some time, dedication, and consistent practice. Here are the main takeaways from this video. ES is one of the best instruments for day trading. Risk management and position sizing are so incredibly important. Psychology will make or break you. If you don't have the psychology to execute your strategy flawlessly without making mistakes, you should highly consider using an automated trading strategy where your emotions cannot cause you to lose money. You need a systematic strategy with clear rules. If you can't show me a back-tested graph of your strategy, you don't have a strategy, you're just gambling. Hands down, just being honest with you guys, trading manually is extremely difficult. It's also extremely mentally taxing, which is why I am making the transition from manually trading to trading with an algorithm. The truth is that with manual trading, there's a lot of things that can go wrong, especially when you're first starting out. However, with automated trading, all of those variables and things that could go wrong are handled by a mathematical algorithm. Therefore, there's no surprises. You already have a profitable strategy and you already have the data that you know works so you can make money from day one. Over the last few years, I've been spending a lot of money and spending a lot of time developing this algorithm that you see on your screen right now. I'm going to be allowing a few of you to test out this algorithm in your own personal account. And remember, it works on funded accounts, it works on your personal account, whatever you need, it works. So if you're interested in using a fully automated trading system that works for you in your broker or in your funded account, click the link down below and let's do a live demonstration of exactly what this will look like plugged into your account. Remember, this is only for traders who are serious about leveraging institutional grade technology inside of their own trading account. There's no buy now button. This isn't a course. This isn't a mentorship. This is invite only, and I will only accept you and work with you if I think that I can 100% guarantee that you will see results. I have my name, my reputation, and my brand behind this algorithm, so I'm only working with people who I am extremely confident will succeed. If you think that that might be you, click the link in the description of this video, and we'll talk soon. Thank you all for watching, and have a great day.